Traders, welcome to today's event. This is going to be a little bit different than some of our standard events. When we put this together, or should I say I put this together, is really, wanted it to be something different than the norm. It's not a algo launch. It's not necessarily a training, but it's not necessarily a sales event. It's going to be more geared toward training and education because the most important thing is, well, if you're going to buy it, you should probably know how to use it to your best advantage, right? So, what we're looking at today is how to use two powerhouse price action patterns, but on the same chart. Now, if you choose to, you don't have to trade it on the same chart. You can certainly keep them separate, but there's no disadvantage to keeping it on the same chart or separating them. It's really just a matter of preference on your end. So, what we're going to be reviewing today is the pin bar algo and the engulfing algo. Now, for many traders, these names should be pretty familiar. They're both very common price action patterns, candlestick patterns. A lot of traders trade these patterns and do very well. There's a number of different ways you can trade them, so we're going to kind of explore some of those here together today. So, of course, before we dive in, we can't guarantee results. Products and services are for educational purposes. We have no idea what the market's going to do tomorrow or the day after. We only know what it did yesterday, so we can't guarantee results. All right, if we're all good on the disclaimers, let's go ahead and move forward. Give me a yes in the chat box. Let me know. You guys good to go? We're able to read all of that. Okay. Read the whole thing. Very interesting. Yes. All right. So why are you here? Right. You're probably not getting the results you want. That's our aim to fix that. Right. If you're struggling to, maybe you have other algos. Maybe you're struggling to get good settings. Maybe you're trading on your own and you're struggling to get some consistency. Really, what we're all looking for in trading is consistent winning results. So that's what we're after here. We can look at man versus machine, but you've seen these on our launches. I just kept it in here in case you wanted to take a look at it. Really, why would you want to automate? When we look at patterns like pin bar and engulfing, there's several advantages to having them as an algo. One is you don't have to enter the market. The algo is going to do it for you. So there's no mistakes, there's no errors. The algo is going to do exactly that which you tell it to do. It's also going to help you with managing your risk on each trade. And if you want to turn it on and off based on areas of interest, that's a way you could use it. If you want it to be 100% automated, you can do it that way. If you want to kind of turn it on in a certain direction based on the direction of the market for the day, certainly you can do that as well. But there's several advantages to using the algos. I like to think that traders with an algo, there's a best of both worlds there, right? There are some things that we can do as traders that an algo cannot do. And there are things that the algo can do that we can't. So how do we use those together to make sure that we can use the best of both worlds, right? That's the purpose and the aim. Not all algos are created equal. If you are not yet familiar with the ARC algos, we have done a few things in terms of creating the engines of these algos. First off, you can use these on any bar type. We also have custom Renko bars that you're welcome to have, and you can use those as well. And they are back testable even just as a bar type, but we went a step further and we've completely redesigned the way that these algos back test inside of NinjaTrader. And the purpose behind that is to get more solid and reliable back tests, regardless of what bar type you use. Okay, so without boring you with the details, just know that our team has spent a lot of time redoing the core engine so that we can get really good results and results that we can rely on. There's a number of different factors in our algos that kind of set us apart. There's entry sizing, which can be based on a fixed cost or a static number of contracts or even percent of balance. So let's say you want to risk $500 per trade, $1,000 per trade, $100 per trade. You put that into the algo and the algo can actually size the position for you based on the number of contracts. Of course, if you just want to trade one mini, you can just trade one mini. Number of different options there. Dynamic stops based on the algos. We're going to look at that as we go through each algo here today. And then a number of different target options, risk rewards, ATRs, static ticks, time windows, blockers, days of the week, skipped dates. So if you want to skip back testing on, holidays, 4th of July, Labor Day, Memorial Day, and so on, you can block those. And not only can you block it from the back testing, but you can also block it from trading those days moving forward, which is pretty cool. Money management, everything is built in. You've got max loss, max wins for the day. You want to be done. You can tell your algo that when you get to, X number of dollars per day, it's going to stop trading. You can set it to, high watermark numbers. So let's, if you're up $1,000 and you don't want to give back more than 500 at that point, you can set that up. There's dual moving filter averages. There's stepping moving averages. You can set the averages on higher time frame charts. There's market structure and momentum filters and all sorts of things you can do with these. So sky's the limit in terms of what you can come up with and how you want to trade these. Okay. So let's dive into the engulfing algo. So let's look at the pattern first, and we'll actually go to the next slide and look at it, but let me get a draw tool ready here. So the engulfing algo is going to trade with momentum. The market, in order for it to engulf the previous bar, there has to be momentum behind that bar. That means that most cases that bar opens, if it's a bullish bar, it opens at the low, it closes at the high. It's usually how these bars look. So there's a lot of momentum behind those bars. So what do you think we might want to do following that bar? Well, we want to trade in direction of that momentum, right? So this is going to be a directional type of system based on momentum. Then we have the pin bar algo, which is going to trade price action pin bars. Usually these are a sign of a market that is reversing in direction. And we'll look at these signals as well. So what we have here is we have one system that is designed to trade directionally. And then we have another system that is designed to trade the other direction. So it's a reversal pattern. So why not take the trending pattern and the reversal pattern, put them all together on one chart, right? That's the idea behind what we're looking to do here today. Okay. So pin bars, what are they? Pin bar is going to, it's going to open here. It's going to go all the way up and then come all the way back down and close back by the low. That's a pin bar. And we're going to trade short off of that. Pin bar goes all the way up, comes all the way back down. That's another pin bar. We trade short. Comes all the way up, comes all the way back down, closes at the low, pin bar. That's what they're doing. There's another one. There's another one. And then we come to the other side. That's a pin bar. That's a pin bar. That's a pin bar. That is not a pin bar. Why is that not a pin bar? Because it didn't open at the lows and then come up and back down. And it didn't open at the highs and go up and come back down. It opened in the middle and closed in the middle. So those are doji candles. It's a different setup. It's not what we're looking at here today. So pin bars are usually a sign that the market is kind of turning. In this case, you pull back. In this case, pull back, pull back. These are all pullback bars. And then we get down in here, and this actually was a short, and it didn't play out. It actually went short off of this bar, but then you got a pin bar going the other way actually on that one. In the other side, we have, market comes down, pulling back, comes back up to the high. Again, pulling down, coming back. And so these are going to be directional bars. We're going to trade with the momentum of the bigger move in this case. Okay. There's a couple ways you can enter these. You've got bar close and you've got intra bar. So with bar close, it's just that. Market comes up, comes all the way back down, it closes, you are in the trade. Okay, so it's going to enter the market right at the close of the bar. On the other side here, we've got intra bar, meaning that this one comes all the way up, comes all the way down and closes. You're going to trade a breakout of the low in that case for intra bar. So with the intra bar, you need to tell the system how many ticks below the bar do you want to get in? Okay. So a couple different ways that you can enter. Mostly what we're looking at today is going to be bar close entries. Okay. We get the signal, we want in. We don't want to wait for it to break the low. We have algo based stops. Let me actually check something. I'm curious about something. Bear with me 1 second here, guys. Interesting. Hopefully I'm not missing slides. We'll find out here shortly. Next, we have algo-based stops. So what this is doing is, again, market opened toward the high, came all the way down, all the way back up, and then closed. Okay. And then in this case, it's, it's got, this would have been a bar close entry. And then stop is going to go below the low of the pin bar. So again, you can tell the stop. Do you want to use a tick offset? There should be some different options as far as that goes as well that we'll look at. But we've got a tick offset, which is going to be, you can use a positive tick offset, which is going to put the stop below the low or above the high. So that would be kind of the standard, right? You're normally going to put stop below the low going long, stop above the highs going short, right? In this case, you can actually set it to have a skewed stop to where it's not below the low. It's actually above the low. And you would just do that as a negative offset. Okay. Pin bar patterns, it's just really demonstrating a long and a short, which we've already kind of looked at. Let's go to engulfing. So a couple different things going on here, right? On the engulfing, again, this is going to be a momentum-based system. The other one was kind of a reversal-based. This is going to be momentum. So in this case, what happens is you've got this bar. The body of this bar is completely engulfed by the body of the next bar. It also happens to be counter-directional. In this case, the body of this bar is completely engulfed by the body of the next bar. And what this is doing is as soon as it sees that, it's entering long at bar close. They see the bearish bar, enter at bar close. Okay, so this is going to be the engulfing patterns. So again, two different ways you can enter: bar close or intra-bar. Bar close we've already looked at. Again, intra-bar is going to trade below the low of the pattern. In this case, this is an engulfing bar, and it's going to have to break the low in this case to get the entry. Yeah, you can run both on the same chart. Yeah, I'm going to show you how to do that. Again, algo-based stops. You're going to be able to either put the stop below the low or even above the low. We can look at it that way as well. Of course, money management built in. Really, it's you tell the algo, here's how much I want to risk, and the algo is going to size those positions for you. You also have money management, so you can tell it, I have a max goal of 1,000. I have a max loss of 500, whatever the case might be. And you can also use a high watermark. And so that's all in there for you. And really great opportunity to make the algo do what you want it to do. So good stuff. Any questions so far? Everybody doing okay so far? Now, this is kind of more like a training, is a little different approach to typical events. So any questions so far? Good to go. Good to go. That's awesome. Neon had some great trading today. That's a good thing. Yeah, sounds good, Al. All right, so let's go ahead and check out some charts. Let's check out some charts and some back tests. So what I've done here is I put a lot of time into getting templates ready for you and doing some back testing and figuring out what markets to run these on and how to run them and so on. So that's most of our time is going to be spent going over those. So this is a bunch of different markets on the two different algos. And this is from July 15th through August 9th. Exactly those dates on all of them. So we've got, 3,400 here, 4,100, 8,500, 14,000, 9,800, 4,200. A lot of opportunity here, right? A lot of opportunity to make good money. Now, this is based on $500 of risk per trade. I realize that, a lot of traders are maybe not using these exact numbers. Some might be trading lower, some might be trading higher numbers. And so you'll have to kind of factor your numbers based on your risk per trade. A lot of this is going to come into play as far as, how much you're risking as a whole. Because when you think about it this way, just right here, we have 6 different algos. So what you have is 6 different, um, you know, really 2 different strategies on 3 different markets, offering 6 opportunities to trade. So with that number of trades, you might size down your risk. I'll show you something that can kind of put it into perspective of why would you want to use multiple algos, right? What would be the advantage of doing that? And yes, these are all going to be available for you with this event. I've got 7 templates ready to go for you, okay? I'm also going to tell you what to optimize and what to stay away from, because I feel like, that's one of the biggest challenges in using these algos is how do you optimize them? I'm also going to make your life a lot easier in the sense that none of these templates have a target. Not a single one. None of them have targets. What? Yeah. If we go up here, this should be that way. Yeah. So all of them are set to 0 for target. So what does that mean? That means every single one of these is set to run. So it's going to get in the trade and it is not getting out until it is done. Like it's that simple. So that's where you can really get some of these big moves out of the market. When you've got a trending system that is primed and ready to run, don't stifle it. Don't take away from that performance. There's opportunity there. And so, a lot of traders, especially those that are trading, say, with prop firms or that sort of thing, they may not be looking to really leave runners because they might be trading a couple different strategies on a couple markets and they're just looking to get in and out, which I totally get and I totally understand. And frankly, that's how I trade. But at the same time, if you're running 6 different opportunities or strategies, we can call them, I guess. But if you've got 6 different algos running at the same time, what's going to end up happening is you might have this one doesn't take any wins, and this one takes a couple stop outs, and this one takes a couple stop outs. But these 3 all take huge runners. So these runners, these trades end up becoming pretty big. And a lot of these end up with, as far as risk reward, 1.3, 2.0. So the risk reward is in every one of these cases, really for the most part, should be, skewed above 1. Some of them aren't, which is just how it goes some weeks, but that's the idea behind this. Take what the market is going to give you and nothing less. Take everything the market is going to give you and nothing less, right? Yeah. So JJ, I appreciate the question, and in most cases you would be correct on that, but in the case of these algos, the back testing engine has been completely redesigned from the ground up. So these will be accurate. Yeah, these will be accurate numbers. So, but fair question, totally get it. Let's go into the charts and take a look at the charts. So I've got 3 different charts, actually 4 different charts pulled up. Originally, when I started with M2K. Okay. And this is my level of transparency. If you guys know me by now, I'm pretty straightforward. I ran these on M2K, just figuring most traders are probably going to want to run maybe an equity or 2 and then crude. And they tested great. 2K tested really well. And I kind of watched it last week. And I just wasn't happy with the performance on 2K, so I went and looked at gold. And wouldn't you know it, gold looks way better on both of them. So why not run gold? So I have two settings for each market. So we've got crude, 2K, well, really crude, gold, and NQ. Okay, so we're going to give you, the pin bar and engulfing for all of those markets. Plus, I'm going to give you one for 2K that I think probably still has some life in it yet, but maybe you kind of keep an eye on it and see how it does, kind of thing, right? Again, this is just my level of transparency. I'm pretty straightforward, and we'll tell you what you need to know, right? But let's look at this. So what I did was I took all of the trades from everything, and we can, kind of hide some of these because there's a lot of data here. Let me get rid of some of this. We'll kind of clear some of this out. We don't need to know all of that. And we'll hide that, and that's fine. We don't need that because we're putting them all together. That's fine. So make this a little easier on the eyes. There's a lot of stuff going on here. So what I did was I took all of the trades. Now, again, this is kind of a simulation of sorts, but all of the trades from all of the back tests and put them into one. The reason that we do this is each back test is going to show you what was your max drawdown for that instrument and what were your numbers for that algo, right? Well, if you're running a portfolio of algos, you're not really looking at it on a one-by-one basis. I mean, sure, that's how you optimize them. But the point of running a portfolio is you might have one algo on one instrument that is killing it, and on the other instrument, it's just not. And so what you can do is when you have enough of these algos that are working together, and there are some that are doing really well, the idea is you want to have more of them that are doing well than aren't, which puts you in a profitable position, right? So when you take all of these and you put them all together, and we can even do risk adjusted, which we can look at as well. But we've put all these together, and then we looked at even the drawdowns as a whole, because you can see when you put them all together, the drawdown is actually less than it is on some of the templates because you're running them together. So while one algo's in a drawdown, the other algos are keeping your portfolio going. Does that make sense? So you're outrunning the drawdown with more trades. So you've got some that do really well at times, others that don't. When you look at it from a daily perspective, like, I don't know about you, but that looks pretty awesome to me, And I know we see these on the back tests and the algos, right? And that's the whole idea. Why would you want anything that doesn't look like this on a back test? For sure. But we want to see actual performance that does that. So how do we do that? One is keeping constant updated optimizations, and I'm going to show you how to do that as well. The other is running more than just one algo, all right? NinjaTrader calculates on a, sometimes they will separate trades based on the number of contracts, right? As far as I can tell with the algos in the back testing, it does lump them together, as far as I can see here. So I think we're okay there, but that's a good question. Yeah. Yeah, but this is the idea. How do we get 41,000 in profit with a drawdown of 2,700? Now, some of you go, well, that's kind of a lot to risk 500 per trade. The max number of trades that all of these systems combined took in one day is 16 trades. Why would you want to know that? Because you want to know how active it is. And so you might have a 5-trade daily max drawdown, right? So based on that, how many max losing days in a week? Most traders are going to say 3. If I'm down 3 days that week, I'm done for the week. And most traders would say, a couple weeks maybe to hit max drawdown, maybe a week and a half. Basically what this means is you would have to have, if this was the case, you'd have to have 6 days where you're taking on 5 max daily losses in one day, and that would put you at a max risk. If your drawdown was 5,000, for example, that would put you at a max risk per trade of about 167. So if we put this at 167, our max drawdown's 901 and the profit's 13,000. So like, even if you're on the 100, or I don't know what the drawdown is on these, maybe the 250 or what, I don't know what size, 150 I think is the 5,000. Um, yeah, 150. So, 167 per trade is actually pretty low if you have a 5,000 drawdown. This is putting you at 30 max trades before you're hitting that drawdown, which is actually pretty conservative. I would think if you're running multiple algos, though, you probably want to be a little bit more conservative on your risk modeling. Okay. So the idea behind this, again, if you're at 15 max trades, that puts you at 333, and you've got, max drawdown 1,800 and 27,000 in profit. So this is the advantage of running multiple algos, is it's not, when we trade, we're not just locked into trade by trade by trade. We're looking at it from a daily perspective. Did you win today or did you not? Did you take some profit for the week or did you not? How do we focus on being able to take profit every week, right? So that's the whole idea behind this. Okay. Good stuff. So with these with these templates, I've got 2K, GC, right? They're all in here. And then let's go to the charts though, because I want to spend some time taking a look at those. So, and this one I've got 2K, I've got one on 2K, and then I've got two on GC. Now this is about month to date for these, okay? This is about month to date. And so this is about 13 days. All of them are showing profit. Obviously, they've just been optimized, so they should be, So yeah, it's like managing your own portfolio for risk manager. Yeah. This is in sample. When it comes to doing out of sample testing, the way that I would suggest doing that is not to take today, and this is actually a really great topic for us to talk about. Again, kind of a different approach here. So let's talk about this. So in sample versus out of sample, right? We always hear, well, out of sample and you need 6 months, or you need a year, or you need 2 years. And the reality is what happened a year ago means nothing to me today, right? Means absolutely nothing. Now, at the same time, you don't want to necessarily take that for granted. So here's my thought on out of sample testing. What you do is you go back and you optimize for a period in the past. Optimize. Forgot a few letters. Okay, so if you want to do out of sample testing, go back and optimize. Let's say you go back to March and you go, I'm going to optimize from March 1st through March 30th. And I'm just using random dates. And then what you're going to do is run the back test now for the following week. So, let's say it's 4/1 to 4/5. Again, I don't know what the dates are, but I'm just giving you an idea here. So you've now optimized for 4 weeks. What were the results for that week? And then you do it again. And you go to, well, now we're going to run, 4 or 5 back to 3/7 or whatever the case might be. And then you're going to run that one from 4/8 through 4/12. The purpose of doing it this way is then you're always using the most recent optimization to get the results for the following week. Why would you want to do this? Because then you're going to get better at optimizing the algos. How do you practice with algos? That's how. How do you get better at doing optimizations? That's how. And if you're not doing that, my question to you is, why the hell not? Why not? If you want to get good at making money with algos, that's the way to do it. You got to be able to look back and look at the charts and say, what happened? So let's do that. For example, let's go into GC. We're going to go back here and we'll just go look at some trades. So now everything's on the same chart. This is from today. So we have, this would be an engulfing pattern. And there is a way that we can differentiate, which I'm going to show you when we come across it. This is an engulfing pattern going long. Okay, market gets into the trade. Again, the stop is staying the same, and then it moves up. And it does not get out until it hits a trail stop. Every one of these is set by no targets, trailing only. Okay. Can you set a target? Yeah, sure. I just didn't optimize it that way because I didn't want to do it that way. Okay, this one got in short on engulfing and took a stop out. Let's keep going. This is on 1-minute bars, by the way, so it's more active. You could use it on 5-minute chart, 3-minute chart, volume chart, whatever you want to do. I just optimized everything on 1-minute charts so that you can optimize it all in the same time frames and the same chart. So make it easier on you. This would be an engulfing pattern short. We can see that we had the up bar completely engulfed by the following down bar. And so it took the short there. We had some profit on the table, and the stop just didn't trail down until over here, and then it took out the stop here. So this actually trailed down right on that bar, it looks like. Let's look. Now, this is one where it's going to be skewed a little bit because obviously you can't take two trades at the same time on the same instrument. So this is what we're going to do in terms of being able to use both of the algos on the same chart. Frankly, it doesn't matter if you use them on the same chart or not. You're still going to have to do this. So here's an example. So this one takes an engulfing short right here. The way that you can differentiate, the bright red is engulfing. The dark red is pin bar. So the pin bar entry was right here, and the stop is down here. Now, you don't have to have stops that big. This is just how it optimized, and so that's what we went with. In this one, it went long here. So obviously you're not taking that short in real life. Okay, so just bear in mind that there are more trades that aren't realistic in terms of running it all together. So there's this trade. So this trade was the first one. So that's the one you would be in. As soon as this trade gets entered, what you want to do is you want to have something like this up on your screen. And let me get rid of the drawings. So this is a account data window, and you just go here and you go to strategies. Okay. And then all of your strategies are located here. You want to have this enabled button on. So let's say, and we have it sorted by instrument. So let's say you get a trade going long here, and you can tell because you can color code them, or you can just run them on different charts. That's fine too. And then you can name your charts. One is engulfing, one is pin bar, right? But the point is, as soon as this trade gets entered long, you just go to the other one. You say, okay, this one is a pin bar. So I'm going to go and I'm going to turn off engulfing. Click. Now it's disabled. So as soon as you are now out of this trade, you turn them both back on. And you think, well, what if they take both trades at the same time? It is literally impossible because they're two different patterns going in two different directions. And also they're set based on exponential moving averages as a requirement. We have an 8-period moving average and a 55. If the 8 is above the 55, that is long trends and short reversals. That is long engulfing and short pin bar. When the EMAs cross down and the 8 is now below the 55, right here, then you're going to be going short, engulfing, long, pin bar. You cannot take two trades at the same time because they're set based on the moving averages. By the way, I wouldn't suggest changing those. I would leave those, hint, hint. So this trade doesn't really exist, even though it exists in the back test. And in real life, you're not going to trade that trade. Here's one going long, get into the trade. This is a engulfing, and you get in long, and then it gets out here. As soon as that trade exits, you're turning the other one back on. In this case, it was another engulfing, so it would have got in right away anyway. There's another trade, got stopped out there. So we'll go look at some more. So this is an example of how you can use these on the same chart. Let's go to trading hours here. This one here, you'd be in this trade, so you would not take this this short here on the pin bar. That would be a pin bar short. How can you tell? Because of the color. And you can do more. You can put racing stripes on. You can see I have them on racing stripes on one, but not on the other to differentiate them. You can change the racing stripes to different colors to differentiate the systems if you like to do it that way. So you could have it like green and red for the engulfing, and then like cyan and magenta for pin bar. Like you can do that as well. That'll help you differentiate. Or like I say, you can run them on two different charts and then just name them. One is going to be called engulfing MGC and the other is going to be called pin bar MGC, whatever the case. Here we go again. So got a couple different trades here. This one, clearly a pin bar, right? You can see the move. Market's coming down. The 8 is below the 55. We're coming down, coming down. So we're looking for engulfing shorts, or we're looking for pin bars long. The beauty is we don't have to figure it out. The algos do it for us. Pin bar comes in, market comes in, takes the trade and trails the stop automatically, gets out right here. Then going the other way, EMA's cross. Now we're looking for engulfing shorts or pin bar longs. We get an engulfing short there. Market gets in, trail the stop, getting out there. What do you think? Pretty cool, huh? Pretty sweet that you can do this all on one chart. Here's one, it's a stop out. Market was looking to go long on the engulfing pattern there. And the market just said, nope, I'm done going long. I'm turning around, and there was no pin bar up here. So we didn't take the short first. So it is what it is. We can keep going. There's another stop out on engulfing. There's a pin bar, going long pin bar. So you can see the short failed on the engulfing, and then market came down, put in a pin bar. So fine, we'll take the trade going the other way. Pretty cool. So this is an example on gold. We can go in and look at 2K. Like I say, I only have one on this one. It's engulfing. To be honest, I didn't like how pin bar was performing on 2K. I think the engulfing is the way to go on 2K. 2K is a really whippy market, and so it makes sense that the engulfing would do well, because they like to kind of flush out liquidity on M2K or Russell for that matter. So I think the engulfing is going to be a better bet. Yeah. So anyway, cool. So 2K is pretty simple, pretty straightforward. That one was a stop out. Let's go to some of the other markets. Let's go to NQ, because I know a lot of our traders trade NQ, and for good reason. Let's look at it. So, market today, right? It's pretty obvious which direction you want to go on 2K today. If you're saying short, then I question your judgment. But here we go. So we've got now the red lines might be for pin bar, because this is engulfing. And so if you see this and you go, I really don't want to take reversals on this market, what do? You go to your pin bar and you turn it off. And it's only going to trade trends with engulfing. But if the market decides to start oscillating, you have trades that you can take in both directions. Or if it's really oscillating, you can say, I'm going to turn engulfing off and only trade with the pin bar at the highs and lows. So you as a trader get to decide how you want to trade. You don't have to do just this. These results are based on trading everything, but you don't have to do that. In fact, I think you'd be wise to set up some kind of parameters that tell you, are you directional or are you oscillating? And that could be as easy as, adding a 100, 200 period moving average, 50, 100, 200, whatever you want to do there. Okay. So a long pin bar followed by engulfing short, that would be stop reverse now. So if long pin bar followed by engulfing short, that would be a stop and reverse. Well, you'd only be in one trade. It would be really hard to get this engulfing here and then get a pin bar right as it's closing, or to get, let's say it's coming down and you get stopped out, you could get a pin bar long at that point. So you could get a long. I mean, the whole point of this is making money. It's not about, babysitting or not. If you're not, I think you're leaving too much risk on the table, and there's money on the line. I would say babysit the things. I mean, if you want to make money, that's clearly the right approach to it, I think. So yeah, so you would have, only one trade on. So if you're in an engulfing long, you bring to your markets together and you go, okay, I'm going to go to my pin bar, which is right here. You can see pin bar, and turn it off. So there you go. And it should even show when you have a position on. So right now there's no positions because it's on backtest mode, obviously. So yeah. Best setup for NQ, ES, crude, pin bar, engulfing, both. Why not? Yeah, do both. Crude responded great on pin bar and engulfing. So did NQ. I didn't test ES because I don't personally trade it, but you could try that too. I think 1 minute's going to be pretty tough on ES though. So going to be pretty tough. So there's the engulfing today. Obviously, the market was trending. Obviously, the algo took the trending trade, and obviously, it worked. So that's the whole point of doing this. Let's take a look at this one. So this one would have been a pin bar going long off of this bar right here. Excuse me. So this would be the trade that you are in. As soon as you get into that trade, you go into engulfing, you turn it off, you take the win, and you wouldn't have gotten this trade either. Instead, you would get out here and you go, okay, as soon as I'm out, they're both back on, and then you're getting this trade going short. Pretty good. Good stuff. Another thing that you can do if you're saying, I really don't want to sit there and watch these things, what you can do is, let's say we're coming into this day and it's 9:20 or whatever, 9:30. Look at the day. Where are you at? Are you trending? Are you oscillating? I would say this is trending, right? The EMAs are down. They're starting to squeeze together here, but there's nothing saying that this market is going to oscillate until maybe later in the day. And you could just pick a direction. Are you going to trade trends with engulfing, or are you going to trade reversals with pin bar? Turn one on and walk away. That's a way to get around that. So this one, tried to take a pin bar, tried to take another one, and then took an engulfing. All three were stop outs before the market finally came into some semblance of balance, and then took a trade here for a win, another stop out. So that would have been a tough day, but then the afternoon hits and you get a beautiful, this would be a pin bar going short. So really great opportunity there. And then it got out, obviously you would get out before the end of the day. And in fact, I think this one just closed out because it was the end of the day. So so this is how you can use, both of them. Again, same charts, and, month to date obviously looks pretty amazing on these. So this one has two, this one has two. And then if we go back to gold, that one has two as well. Okay. What questions do you guys have on this so far? Any questions so far? Make sense? So again, the 8 and 55 are your filters as an EMA. If the 8 is down, you are going to be going short engulfing and long pin bar. Cool. So what about optimizing? What about optimizing? I'm going to show you that too. Yep, everything's built in. It does stops, targets, everything for you. It doesn't use ATMs. It does it through the algo directly. So the stops and targets are directly attached to the algo. If you turn off the wrong algo and you're in a trade, it's going to close your position. So just so you know. And it does that because you don't want to have random stops and targets sitting all over the place. Yeah. That's a recipe for disaster. So, all right. So what you want to do to optimize these, I'm going to show you this. It's going to be about as simple as it gets. And I'm going to give you some notes on what to do, how to do it. Where's my notepad? Here we go. Cool. Let me go to my testing notes, and I'm going to give you these. So in a perfect world, which we do not live in, but in a perfect world, all you want to optimize with these are going to be the stop and the trailing trigger. That's it. The stop and the trailing trigger. All of these are trailing 3 bars back. That's it. And you're going to do that for each algo on each instrument each week. So you take 4 weeks of data and you go back and you back test those 4 weeks, optimize, and then you run that for 1 week. And then at the end of the week, you go back and you back test 4 weeks, run for 1 week. Repeat, 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 over and over and over. That's it. Back test 4 weeks, run a week. Back test 4 weeks, run 1 week. What are you going to back test? Here's what you're going to back test. MCL. Your ranges on the stops, 20 to 40, testing by 5. I'm going to show you what that looks like here in a minute. For example, we came back at a 25 stop, and it's exactly the same for the stop and the trigger. Like, I don't know if I can make this any easier. So, like, the stop was 25 and the trail was 40. And that's all you need to do. And you do this once a week, and it takes you like less than an hour to do 6. And you optimize everything. Now, if you start to get losing weeks, multiple weeks in a row on an algo, you're going to want to maybe look at digging deeper and maybe trying to optimize some different things. Go in and look at the charts. Look at the trades. What are the markets telling you? And then base your judgment on that. Do you need to change your bar sizes or any of that? And we'll kind of go through and look at it together. Okay. Let's see. M2K. Your ranges are 40 to 80 by 5. MNQ, 100 to 200 by 20. Now, these are just suggested numbers. You don't have to go off of this. You can come up with your own numbers. Maybe for NQ, you want it to be 80 to 240. I don't know. Maybe 200 is too big for you and you want to go to 160. And maybe 20 is too broad and maybe you want it to go down to, I don't know, 8. I don't know. However you want to do it. Okay. This is just a starting point and you can, do what you like. MGC, 20 to 40 by 5. Okay. Take a screenshot of this, please. This is exactly what you need to optimize each week. And we'll do one together. You guys got it? Good, good. 5, 4, 3, 2, 1. Cool. You could do HG and platinum, but those are kind of expensive for a lot of traders, but sure, try it. Pin bars, probably you might even look at nat gas if you're trading some of those. Definitely check it out. So cool. So that's what you backtest. So let's go back and we'll do an example. Then we'll kind of go through one together. Let me just lock this in so we can see what the heck we're doing. There we go. Okay. So this is the engulfing on crude, just random. What we're going to do is I'm actually going to go in and load the template again just to be sure. And we'll go MCL. Yep, we'll send it to your email, Mark. Don't worry. Yeah, we got you covered. So let's go back to, let's go back to March, like we were talking about. Okay. And we're going to back test March. Again, this is a way that you can practice the optimization. So we'll do that. I'm going to actually go to optimization now. So you just go all the way to the top, go to optimization, and everything is brought over. If you do not load the template, you will have to start from scratch. So load the template first. First thing I'm going to do is make sure the dates are correct. I'm going to go to MCL. Always make sure your commissions are turned on. And then I like to set it to max net profit. This is always my first thing that I do on every optimization. And I come all the way up. And what did we say we were going to test? We're going to test stop loss and trailing trigger. That's it. As far as the engulfing, we've got it set to a minimum 50% body on the high-low range. And then the minimum bar size is 0.5 ATR. There's nothing fancy going on in here. There's also no target, as we mentioned. Target is set to 0. By doing that, we're only trailing. Like we're only trailing. We're not setting targets. So I'm going to go 20 to 40 by 5. And then I'm going to go to the trailing trigger and I'm going to go 20 to 40 and we're going to go by 5. Okay. That's it. I'm going to hit run. So we're going to give it a minute to run the optimization. We'll see what the numbers come back at. For the record, I have not run this back in March, so I don't know how it's going to turn out, to be honest. Yeah, you can. So you can set the algo to tighten up the stops for you, or you can set the or you can just move the stop manually. Okay. So this one, really didn't perform well. There's only 15 trades, so this is probably not a great example because you'd have to dig through and dig a little deeper on some of these, and we don't have all that time to do that today. So let's go to NQ, and let's try engulfing on NQ. We'll just go a different route. This one has 34 trades, might give us more to work with. Let's try it. So go back to load NQ. There it is. Right. And I'm going to pin this back. We're going to go to optimize. And then again, we can go back to March. So I've got about 4 weeks there. Max net profits. And then bar size minimum on this is 0.4. It's a little bit more open on this. We're going to test the stop and the trail. 100 to 200 by 5. 100 to 200 by 5. Cool deal. Good to go. And then we'll go ahead and run that. 441, that's a lot. That's going to take too long. Did I do by 5s or 20s? Yeah, it's supposed to be by 20, not by 5. All right, so that's the idea, though. We're not going to spend all this time because this is not a full-on training event, but this gives you an idea. That's literally how you go in and test it, and then whatever the best number is, you save that, you run it for a week, and then that's what you go with. So these are all set and back tested based on current markets, and so moving forward, this should be something that you can run with. If you get to a point where, like I say, you're getting a couple of weeks that are not profitable in any one system, then you might want to venture out and kind of look at some of the bar sizing, go to the chart, check it out. See if you might need to change something. Maybe the 1 minute is too aggressive. Maybe you need to switch the bar type, that kind of thing. So that kind of gives you an idea. Let's see. So yeah. Question is when you back test for 2 weeks and you go back and test some trending, then replicate. Yep. Yeah, with profit factor, you could, if you optimize based on profit factor, you end up eliminating a lot of trades. You end up filtering less to get less trades. So if you go by profit, then all of them are going to be more profitable, and then you can choose based on drawdowns and profit factor as well. I've always found that to be the best approach personally versus optimizing based on profit factor, because you might get an optimization that only gives you 10 winning trades. And yeah, it looks really good, but then when you go to trade it forward and you get 10 losing trades and you're like, well, that was not cool. So yeah. So try it on max profit. Yeah, for sure. Cool deal. Any other questions? And then I have a very, very special for you. So that you can get both algos and you can run with them. It's a very special offer. Questions? Good. Everybody ready for pricing? So would change backtest missing background. Yep. Yeah, you could. Yeah, absolutely. If you notice, things have changed a lot in the last month. Whether you're trading algos or you're trading your own account discretionally or whatever, the volatility has changed dramatically over the course of the last month. Like we started out, the first couple of weeks of July were an absolute disaster, and then it kind of settled in. And then we got to August, and it was like pure chaos the first week. And now, even last week was pretty chaotic. And then we got today, and then you've got PPI tomorrow, CPI. So things have been moving pretty rapidly. And what was a month ago is completely different than right now. And so, yeah, totally different. So I think that's why it's so important to look at when you're optimizing too. You always want to look at the more recent end of your optimization. So let's go to a different one. Let's pull this one. So when you go to your analysis and you're looking at your equity curve, and give it a second to run here. So you can see how, over the last week, especially, you want to look at the more recent stuff and see, are you getting good numbers, net profit. The 9th was a losing day, but ultimately, recently it's been good. You don't want to see that it's like green, 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 red, red, red. Because if you see that, then that's telling you that the market conditions might be changing and it might be too skewed toward 4 weeks ago versus current market activity. So always look at that and look and see, are you getting your wins toward the tail end of that or toward the beginning? If you're getting nothing good over the last week, let's say, then you'd probably want to cut your time of testing down to maybe like 3 weeks or 2 weeks even, and optimize it that way. That way you have something that's more geared toward the current market versus 3-4 weeks ago. Yeah. Yeah, equity curve is very important to look at. You can review VIX and ATRs, absolutely. That'll tell you what the markets are doing. And figuring it this way, like these are 1-minute charts. And so these are going to be drastically different than it would be 3-4 weeks ago even. And so, yeah, 1-minute charts, even 2 weeks is kind of a lot of data to test, to be honest, on a 1 minute. So good stuff. All right, cool. So we got through some questions. So let's go ahead and go over the special. All right, so we're going to do a 2-for-1 special. So you can get pin bar and engulfing for $9.95, which is really a fantastic deal. So you've got the code plus the updates. Obviously, that's the algo itself, the custom engine. You've got both Discord groups, detailed user documentation on both, white glove ongoing support. If you want us to go ahead and install it for you, we can do that. Pre-built optimized templates, they're all included. I've got 7 of them for you ready to go. Deep dive on the video and then live VIP. This is actually recorded. So it shouldn't say live, it should say recorded because it's already recorded. Okay. And this is kind of like an AMA. So $9.95, that is your pricing. That is your link to purchase should you choose to do so. And of course, I recommend that you do. Let me go in and grab the link for you so I can paste it. Let's copy that. So there's the link. Go there, grab it, good to go. As you know, we have a love it or swap it policy. It is not available for product launches. So if you buy these and you see a new shiny object and it comes out next month, later in this month, because it will, then you can't trade it for the new item, but you can trade it for anything else. Okay. But if you really like the new algo, you could buy that. And then if you don't really like the new algo after using it, you could trade that for something else. But you can trade these out if for some reason it doesn't work out. You've got $9.95 that you can use toward anything else. Okay. Good stuff. So that is it. That's what I've got for you. Any questions? I'm going to run a poll too while we're at it. And let's go ahead and run that through. There we go. Let us know so we can let our team know if we need to help with installs and support questions, things like that. If you have questions, let us know so we can reach out. Support, get in touch with you. Yeah, this was fun. This was honestly a it took a good chunk of work to put all this together. And so I'm glad to be able to do this with you guys and spend the time to get everything ready on the templates and settings and all that. So here's what I'm going to do now is I'm going to get the settings together in a folder. Actually, let me just go ahead and I'll just grab them and drop them in Discord. I'll do that right now. So let's go to documents. All right, so engulfing. Let me paste these while you guys are doing that. Templates. Strategy. There we go. So I've got 4 templates coming in hot on engulfing. I think. Let me check. Let me check something real quick. M2K was just the engulfing. That's right. Okay, cool. Cool. So I got 4 templates that I've just pasted in the engulfing, and then I'll go to pin bar. So just download these and then save them to the folder. You cannot import them. And then I will go to engulfing. And let's go ahead and paste those 3 on. Oh, shoot. Did I do the wrong one? Strategy engulfing. No, that's right. Okay. Pin bar. And we're going to do the 3 on pin bar. There it is. Oh, thanks, guys. All right, let's see. We've got some questions coming in. How long might it take to get up and running with White Glove? 10 minutes. Question I already have both. Yeah, of course, Kenneth. Yeah, we pasted the templates in there for you. There's no license giveaway. It's not a launch. What is the Discord link? Let me get it for you. Invite, copy. There's the Discord server. Neither. Neither Neon. Can you post the templates? Weibo, I don't have any templates on Weibo. I haven't really been working on it, Mark. Sorry. But I think there are a lot of traders using it, so there should be some in there. Yeah. Cool. I think we are good to go. Good. I'm glad you guys got something out of that. That's great. No, I think the way to do it, if I was trading algos, it would be at least 3 markets per algo and at least a couple algos. That's the way to do it, if you ask me, because not everything's going to be good every week, and you need to be able to have enough of them running. So that's why it's called diversification. So good stuff. I like 2 to 3 markets per algo and a couple algos. Yeah. I mean, that's the way I trade, right? Like I trade 4 different strategies on 4 different, well, at least 3 different markets. So, I mean, that's how I trade in real life. So why not do that with the algos, right? Yeah, we'll send you the links for sure and the recording. Tick Blaze next month, I think. We are originally hoping for this month, but there's maybe more involved, I guess. I don't know. Soon. ASAP, as soon as we possibly can, for sure. Yeah. Cool deal. All right, that is going to do it for me. What is time frame for trading? Is there certain times a day? These are all set to mostly 8:30 to like 2:30. And then kind of some of them have less time involved in trading them and than the others. So just depends on the settings and what works. Obviously, trading as much as the system will allow for. So, yeah, cool. Good, good, good. Yeah, you can try from 7 a.m., see what works. Certain markets will work really well. Yeah, for sure. All right, guys, thanks for coming out. Appreciate the time. If we can do anything for you, as always, reach out. Otherwise, we'll see you in the trade rooms and we'll see you on the charts. Have a good one. Happy trading. Cheers. Thanks for coming out. Take care, guys.